Happy Friday! Thanks for joining me this week for the latest news brought to you by our Capital Markets Trading Desk here at SunWest Mortgage Company. I've got a lot of information for you, so let's get to it. Markets suffered losses this week as investors reacted to an influx of economic data. A strong job report last Friday led to a slow start to the week. Hotter than expected inflation data reverberated through global markets and sent stocks and bonds into a tailspin. On Wall Street, the three major indexes fell while the 10-year Treasury yield climbed back above the critical 4.5% threshold. Investors are now pricing less than 2 quarter-point cuts for this year, as the data suggested that the progress in taming inflation may be stalling, and there is a rough path ahead for the Federal Reserve to achieve its 2% target. Wednesday saw the release of the inflation data that sent shockwaves through markets. The Consumer Price Index rose 0.4% in March, above the 0.3% forecast. On an annual basis, CPI was up 3.5%, 0.3% higher than February. Core CPI, which excludes food and energy costs, accelerated 0.4% monthly, while rising 3.8% from a year ago. Labor Department data showed that U.S. producer prices rose in March, the most in 11 months. The Producer Price Index for final demand increased by 2.1% from a year ago, just below the forecast of 2.2%. The PPI increased by 0.2% monthly, a sharp drop from the 0.6% recorded in February. Small business confidence has hit its lowest level since December 2012. The NFIB's Business Optimism Survey released this week showed a reading of 88.5, down from 89.4 the previous month. Respondents cited inflation as the biggest reason for the drop in confidence. The Commerce Department said on Wednesday that wholesale inventories met expectations and rose 0.5% in February. Sales at wholesalers rose 2.3% in February after declining 1.4% the previous month. Despite the average mortgage rate rising above 7% last week, MBA mortgage applications were able to inch out gains of 0.1% for the week ending April 5th. Refinances were the main reason for the gains, as there was a 10% increase in applications from the previous week and were up 4% on a yearly basis. The purchase index went down 4% week to week and 23% compared to last year. New applications for unemployment benefits fell more than expected last week. Initial jobless claims dropped to 211,000 for the week ending April 6, 11,000 less than the week before. And a sign that laid-off workers may be having a harder time finding employment, continuing claims rose by 28,000 to 1.82 million for the week ending March 30th. The number of people receiving unemployment insurance as a percentage of the labor force remained at 1.2%. In international news, the European Central Bank decided on Thursday to hold interest rates steady at 4% for a fifth straight session. In a statement, the ECB also sent out signals that cooling inflation will allow it to loosen monetary policy. Markets are pricing a 25 basis point cut in June. Thanks for watching. If you liked the video, please hit the like button and come back next Friday for more of the latest news. Have a fantastic weekend. Buffy out.